All right, let's talk about BNY Mellon. They just closed out a really powerful 2025. And their latest earnings call, it was way more than just a numbers dump. It felt like they were planting a flag, declaring a whole new chapter for the company. So we've broken down the whole thing for you, pulling out the signals you really need to see as an investor. Let's get right into it.
So, here's how we're going to break it down. First, we'll hit you with those big, flashy headline numbers. Then, we'll dig into the 1BY strategy, what's really going on behind the scenes. After that, we'll cover how management is raising the stakes with some ambitious new goals. And finally, we'll wrap it all up with our own analysis, our take on what this all means.
Okay, so first things first. Let's talk about the headline numbers. And honestly, these really tell the story of just how successful 2025 was for them. We're not just talking about meeting expectations here. They absolutely crushed them. We're talking new records. Let's kick things off with the top line, a record-breaking $20.1 billion in revenue for the year. I mean, just let that sink in. That's a solid 8% jump from last year, which really shows they've found a formula for driving some serious consistent growth. Now, let's look at a really important metric for profitability, the return on tangible common equity, or ROTCE. It came in at a super strong 26% for the year. What does that actually mean? Well, it tells you they're being incredibly efficient with their capital and bottom line creating a ton of value for their shareholders. And get this number really speaks to their discipline. For 8 straight quarters, BNY has delivered positive operating leverage. That's 2 full years. It just means their revenues are growing faster than their costs are. And let me tell you, that kind of consistency, that's exactly what the market loves to see. So the big question is, how are they doing it? What's the secret sauce here? Well, it's not some one-off trick in a single quarter. No, the answer lies in this massive, multi-year overhaul of the entire company. It's a strategy that the CEO, Robin Vince, has dubbed the One BNY model. And this strategy really rests on 3 core ideas. First, go deeper with your clients. Sell them more of what you offer. Second, run the company smarter, more like a modern tech platform, not an old-school bank. And third, create a culture where everyone feels a sense of ownership and is held accountable. It's that simple, really. And look, here's the proof that it's actually working. Over the last couple of years, the number of clients using 3 or more of their services, it's shot up by over 60%. That's huge. It shows that by breaking down their internal walls and acting as one cohesive company, they're turning simple client transactions into real, deep partnerships. Okay, now check this out, because this chart shows something really important: acceleration. You see, for years, their organic fee growth was kind of stuck, basically flat. But now, it's picking up steam. 2%, then 3%. This proves their new way of doing business isn't just talk. It's creating real revenue that isn't just tied to what interest rates are doing. But this whole transformation isn't just about fixing the here and now. They're also looking way down the road. They're making some big strategic bets on what the future of finance is going to look like. And for them, that future is all about 2 things: artificial intelligence and digital assets. And just listen to what CEO Robin Vince said about it. He called it a catalyst for transformational change and one of the most important evolutions in a technology in hundreds of years. I mean, wow, you can just feel the conviction there. They don't see AI as just another tool to make things a little faster. They see it as a complete game changer. They're literally creating digital employees and plugging in things like Google's Gemini to completely rethink how they operate. And on the digital asset side, again, they're not just talking a big game. They are actively building. I'm talking about things like crypto custody, helping launch stablecoins, tokenizing real-world assets like CLOs, and even deposits. What they're really doing is methodically laying down the tracks to connect the world of traditional finance with this new digital ecosystem. So when you put all of this progress together, it's no surprise that management is feeling pretty good about things. And you know how they showed it? They came out and raised the bar. Let's look at their new targets. Okay, boom, here it is. This might be the most important slide of the whole deck. Management just jacked up their medium-term targets for both pre-tax margin and ROCTE by a massive 500 basis points. That's a 5% jump for each. Seriously, if you take away only one thing today, remember this. And let's be clear, this is not just some minor adjustment on a spreadsheet. No way. When you raise your targets this aggressively, you're sending a powerful message to the market. You're saying, hey, The changes we've made are real, they're sticking, and we now have a clear line of sight to being a much, much more profitable company. Okay, so we've seen the record results. We've seen them raise the bar for the future. So what's the bottom line? What does this all mean for the stock? That's what we're going to get into now with our take. So here's our call. First, the outlook for the next quarter. We see this momentum continuing. We expect them to keep tracking towards that 5% revenue growth target while keeping a tight lid on expenses. Now, the real catalyst for the stock price, we think it's going to be a story of re-rating. The market is going to start seeing BNY less as just another bank and more as a high-tech, resilient financial platforms company. And because of all that, our official rating here at Talk Tickers is Outperform. And just so we're crystal clear, our Outperform rating isn't just a gut feeling. It's based on the evidence we've just walked through. The One BNY strategy is working. It's creating real growth. And those new, higher targets, they give us a believable roadmap for how they're going to deliver much better profits and returns for investors. So it really all comes down to this one question, right? Is this the peak of a great turnaround story? Or is this just the very beginning of a long-term re-rating, as the market wakes up to the fact that BNY Mellon is becoming a premier financial platforms company? We think the real story is just getting started.
And of course, just a reminder, this is for informational purposes only. It is not financial advice.